This is Trade Flow News, bringing you relevant news and insights from around the world. Trade Flow News, enabling trade for SMEs and economies worldwide.
Welcome back to Trade Flow TV. Markets move fast, and if you're not ahead, you're under. Welcome back to the pulse of the physical tape. It is Tuesday, August 4th, 2026. Yesterday, paper algorithms sold off energy on peace rumors. Today, the physical market is laughing at them. Let's look at the reality. We're waking up to maritime traffic jams, extreme weather rewriting the ag balance sheet, and tech giants hollowing out silver vaults. Let's get you caught up for the Tuesday open. First up, the 60-second flash. The energy peace trap springs. The massive paper sell-off in crude on Monday has already violently reversed. Physical demand is king. After Brent briefly dipped near $81.50, physical buyers aggressively stepped in overnight. Brent is surging back toward $84.00 a barrel, while WTI climbs back to $79.70. The logjam in the Strait of Hormuz will take months to clear, cementing a high, sticky floor for global freight. Even with headlines of peace, infrastructure remains paralyzed and costs are rising. Meanwhile, silver's structural deficit intensifies. Spot silver is shaking off the macro noise and holding firmly near $58.40. The physical vaults are looking thin, with COMEX inventories now covering less than 18% of open futures exposure. Panic over a sixth consecutive annual deficit is rising. The physical metal simply isn't there. Copper defies the surplus myth. LME copper is grinding higher, testing $6.50 per pound. The grid doesn't care about paper surpluses, only available concentrate. Grid expansions and the relentless AI infrastructure build-out are swallowing concentrate faster than it can be mined. The physical market tells a different story than industry groups. Finally, agflation is driven by the heat dome. The U.S. agricultural sector is flashing deep red. We're looking at a structural calorie crunch as yields burn. A persistent heat dome over the Midwest is causing massive yield destruction for soybeans. Futures hover near $1,168 per bushel, while corn holds strong near $438. Let's take a deep dive into why geopolitical headlines failed to lower energy freight costs and how silver is setting up a historic physical squeeze. Today's data separates paper headlines from physical reality. The algorithms bluffed, and the supply chain managers called them on it. Here is the physical truth. The Strait of Hormuz hangover is real. A pause in hostilities does not instantly teleport stranded vessels. Brent crude below $82 is fundamentally mispriced. Insurers demand exorbitant premiums, up to 0.4% of hull value per transit, adding millions to every voyage. The physical floor is firm, and the paper market knows it. Silver ghost vaults are the real story. In 2026, it's an enterprise squeeze. COMEX paper claims now outnumber actual physical metal by 5.5 to 1. The vaults are dry. Tech giants, desperate for AI servers, are bypassing exchanges and draining vaults directly. The paper price is an illusion. The true cost is atoms delivered to the factory. U.S. crops are trapped in a stagflationary loop. Global calorie demand has shifted to a harvest that is actively burning under a massive Midwest heat dome. Yield is falling. Here is the trade flow take. The bounce in oil proves wartime taxes are permanent features. Don't short silver or copper. Industrial deficits are absolute. Tilt toward ag processing. Stay liquid, stay sharp, have a defensive Tuesday session, and we will see you tomorrow. Markets move fast, but physical reality moves faster. See you then.
That is all for today's news on commodity markets. Stay tuned to Trade Flow News as we continue to provide you with more updates. We also invite you to follow us on Twitter at Trade Flow News, which allows you to watch our program on your mobile device or desktop to receive information from there.